Hi, and welcome to this video. This will be a forex trading guide for you. We will give you a technical analysis and chart patterns. Unlike most sources of information available for forex chart patterns, this video won't stop at the technical analysis characteristics of the different patterns. The chart patterns are a part of a whole, and our goal here is to show and explain the whole picture so you can trade profitably using the knowledge gathered from this video. To reach that goal, we will go through three main topics through this series of videos. The first topic is the technical aspect of the chart patterns covered in this video. This includes detailed illustration for the patterns, price action structures, as well as the target, like take profit, and failure, like stop loss. Measurements before finalizing each chart patterns will be a full real trading setup as a usage example for the pattern in real trading. The second topic will be tabular data for all the chart patterns, which can be helpful when choosing patterns that suit your trading style the most, followed by an explanation of how to differentiate similar looking patterns using price action highs and lows. The third and most important topic is how to use that technical knowledge gathered from the different chart patterns in a real forex money management plan for a trading cycle. To achieve that, we will use our own strategy to show the whole true process before starting a trading cycle. Before we dive right into the interesting content, remember that forex trading and trading in general is not only about the analysis of charts or financial news. It heavily relies on both money management and trading management for consistent reasons. Therefore, trading a chart pattern must be a part of a bigger plan. Let's talk about the symmetrical triangle and its structure. Price action. In an uptrend, price action finds first resistance, number 1, which will be the highest high in the patterns, but it reverses direction and goes downward till finding first support, number 2, which will be the lowest low in the patterns. Price action reverses direction from support, number 2, going upwards till finding the second resistance, number 3, which must be the lower than the first resistance, number 1. Price action reverse direction from resistance, number 3, going downwards till finding the second support, number 4, which must be the higher than the first support, number 2. The pattern is completed when price action reverse direction from number 4 and goes upwards till it breaks the triangle's upper border at point 5. Before the breakout, 4 touches to the triangle's border are the minimum for a valid pattern. More touches are acceptable. Although named symmetrical, the upper and the lower bodies don't have to be actually symmetrical. As long as lower highs like 1 and 3 and higher lows as 2 and 4 are being formed, the pattern is considered valid. The breakthrough of the pattern is expected at around half or 2/3 of the triangle formation. Measure it from first touch, number 1, to the intersection point of upper and lower borders. The more common direction for the pattern is continuation, but that doesn't rule out the existence of reversal symmetrical triangles. Volume usually decreases as the pattern is being formed and increases when breaking or resisting the triangle's border, number 5. This pattern is commonly found on medium and long-term time frames. Let's talk about trading the patterns. Trade entry after breaking the triangle's border at point 5, either with an entry after confirming the breakout or after a possible retest to the breakout rate. Take profit, identified by measuring the vertical distance from the first touch, number 1, to the second touch, number 2. That measurement is then applied for the breakout point, number 5. Stop loss can either be the breakout rate, number 5, or the last touch to the triangle's border, number 4, before the breakout. Now patterns, rewards, and risk. When using the last touch before the breakout as stop loss, the pattern's risk-reward improves when that touch is near the end of the triangle. When using the breakout rate as stop loss, risk-reward will depend on the entry rate or break rate distance compared to the target measurements, number 1 and 2. Always remember that both stop loss levels explained above are absolute. The actual stop loss rate for your trade setup should be a hit beyond those levels to give that trade setup some room to breathe. And of course, calculation for position size and risk reward should be done with respect to those rates. Let's see a bullish symmetrical triangle real example. Trade entry at the closing rate of the candle after breaking the upper border at point 5. Take profit 695.7 pips usually measurement applied from 0.5. Stop loss 1, 218.8 pips, risk reward 3.180, set at 21% of target measurements beyond absolute SL1. Stop loss 2, 463.1 pips, risk reward 1.502, set at 7% of target measurements beyond absolute SL2. Price action retested the breakout rate. Now the bearish symmetrical triangle. Price action. In a downtrend, price action finds first resistance number 1, which will be the lowest low in the patterns, where it reverses direction and goes upwards till finding first support number 2, which will be the highest high in the pattern. Price action reverses direction from support number 2, going downwards till finding the second resistance number 3, which must to be higher than the first resistance number 1. Price action reverse direction from resistance number 3, going upwards till finding the second support number 4, which must be lower than the first support number 2. The pattern is completed when price action reverse direction from number 4 and goes downwards till it breaks the triangle's lower border at 0.5. And now let's see a bearish symmetrical triangle real example. Trade setup. Trade entry at the closing rate of the candle after breaking the lower border at 0.5. Take profit 482.0 pips, usually measurements applied from 0.5. Stop loss 137.3 pips, risk reward 3.511, set at 21% of target measurements beyond absolute LS1. Stop loss number 2, 391.2 pips, risk reward 1.232, set at 7% of target measurements beyond absolute SL2. In Wanda's MT4 platform, the pip for XAU USD is the first decimal point and the fractional pip is the second decimal point. Thus, we truncate all calculated rates to the second decimal point to discard the third decimal. The ascending triangle. Price action. In an uptrend, price action finds first resistance number 1, which will be the horizontal resistance from the rest of the pattern formation, where its reverse direction goes downwards till finding first support number 2, which will be the lowest low in the pattern. Price action reverse direction from support number 2 and goes upwards till finding the second resistance number 3, which will be around the same rate as the first resistance number 1. Price action reverse direction from resistance number 3 and goes downwards till finding the second support number 4, which must be higher than the first support number 2. The pattern is completed when price action reverses direction from number 4 and goes upwards till it breaks the triangle's upper horizontal border at 0.5. Before the breakout, number 4 touches to the triangle's border at the minimum for a valid pattern, more touches are acceptable. The breakout of the patterns is expected at around half to a third of the triangle formation, measured from the first touch, number 1, to the intersection point of uppers and lowers borders. The more common direction of the pattern is continuation, but that doesn't rule all the existence of reversal ascending triangles. Volume usually decreases as the pattern is being formed, and increases when breaking or retesting the triangle's upper border, number 5. The pattern is commonly found on medium and long-term time frames. Let's talk about trading the patterns. Trade entry. After breaking the triangle's upper border at 0.5, either with an entry after confirming the breakout or after a possible retest of the upper border's rate. Take profit. Identified by measuring the vertical distance from the first touch, number 1, to the second touch, number 2, that measurement is then applied from the breakout point, number 5. Stop loss can either be the triangle's upper border that turned into support, number 5, or the last touch of the pattern lowest border before the breakout, number 4. Now the pattern's reward risk. When using the last touch before the breakout as stop loss, the pattern risk reward improves when that touch is near the end of the triangle, as well as when the lowest border of slope is steeper. When using the upper border rate as stop loss, risk reward will depend on the entry rate, break rate, distance, compared to the target measurements numbers 1 and 2 distance. Always remember that both stop loss levels explained above are absolute. The actual stop loss rate for your trade setup should be a bit beyond those levels to give the trade setup some room to breathe, and of course, calculations for the position size and price reward should be done with respect to those rates. Thanks for watching. We hope you learned with our content. Please join us in the future videos to continue with this series.